Well, we're up nearly $100,000 since last month's update.
That was easy.
The market has been a roller coaster in 2024, but let's be real, the market's always a roller coaster. Make no mistake, when we close all the doomsday articles and we turn off the news, we see that the S&P 500 is up nearly 22% this year. It's important to not get too high and not get too low through it all. In this video, I'll show you what I did last month to keep that wealth compounding. As always, we'll get into the portfolios, value by holding, all new transactions, the juicy dividends received, a quick HODL factory update, my individual stocks versus the market, and any future strategy changes. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please blast that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. And before we dive into the update, we had 3 new channel members to shout out this week. A huge thank you to Marilyn, Raphael, and James. I appreciate your extra level of support for the channel by joining the channel membership. I hope you enjoy the perks, and also, as always, a huge thank you to everyone else that's been here all along. You know what time it is. Let's grow. Sharing is caring. We are comfortably at an all-time high right now with the portfolio, and that's after losing $73,000 in a single week about a month ago. It got me thinking about why most retail investors, people like you and me, perform so poorly compared to the buy and hold investors. And this isn't a random assumption. The data embarrassingly backs it up. I had multiple people ask me what to do as our portfolios were diminishing at an alarming rate last month. And I would casually say to do nothing. Just relax and don't make any moves. Of course, that is assuming that they're set up with a good base system in the first place, which these people were. This is the best move that will provide the best long-term results. But I understand the naysayers thinking that it's settling for average. I used to be one of them. I used to think that the people saying, stay the course and stick to the system during the hard times were lower level thinkers. Brighter folks would know what to do and when to do it. But after years of obsession and research, I now understand that the brightest people keep it simple. I share my portfolio every month on the channel because I think talk is cheap. I like to show what I do and why it works over time with real results. I don't need an ego boost, and there are many younger people running laps around me. The point of these videos is to show you that you can take action regardless of where you're at right now. So let's act. Portfolio overview. We'll hop right on over to my accounts and the tracking spreadsheet. I'm gonna start out here in my E-Trade account. And so I've logged into E-Trade and I'm on all accounts. I like to merge them into one. It makes it easier so I don't have to hide account numbers and everything. But the first thing that stands out to me is we hit a cool $1 million out here. Although, unfortunately, it's gonna take the wind out of my sails when we go over to Seeking Alpha because a few of these holdings are my nephew's, and we'll get into that. So I'm not really there, but I like to pretend I am. So the SCHD is all mine, and you can see we have 4,500 shares at an average cost of $72.94. That's good for an unrealized gain of 51.1K and a total value of $379,000. And then VGT's one I haven't moved around as much over the years because really I have better deals on both of these, but I've shifted things around, whether it's rebalancing and my tax advantage accounts and things like that. So these could look a lot prettier than they do, but since VGT has mostly sat in one account, the 500 shares that I own are at a nice average cost of $246.50 per share. That's good for a $167,000 gain and a total value of $290,420. Sweet. And then JEPQ, 2,100 shares at $49.55 per share. And I don't have this one as a long-term unrealized gain price winner. It's more of like my cash flower, but I'm not gonna complain that I have 9,500 of gains and a total value of 113,600. And this isn't too bad considering I've purchased all this, most of this within the last year. And then QQQM, I just bought one time with one lot, and I'm barely up on that one. We have 436 shares, and 432 are mine. 4 shares belong to my nephew, and he also has this S&P 500 fund and XLK. And that's where I'm saying, technically, I'm not at $1 million. I'll get there someday. But everything else I've said is mine so far. And then here's our cash within E-Trade. We have $82,410. And we also have $91.94 here in the high yield savings account within E-Trade to just make cost averaging into my positions easier without having to sell the money market. I usually keep this $5,000 to $10,000 at any one time. And then finally, we have IBIT at 1,050 shares worth. And I'm slightly positive I've made a monstrous $62. Boom, baby, Bitcoin's the future. And it's worth a total of $37,863. All right, now we're out on Seeking Alpha, where I do all of my portfolio aggregation and all of my stock research, ETF research, screeners, run the HODL factory out of. Pretty much my whole world is here in Seeking Alpha. I'm not gonna lie, I didn't do that blurb for this, but how could I not add on here real time? I do have a link for Seeking Alpha Premium if you would like to try it for free for 7 days and save money on your full first year if you like it. Help support the channel, but it leaves more money in your pocket, which is more important than that. So we won't go over all the positions. Here's the E-Trade stuff. I will say I've been guilty of not doing this. It is October 7th, end of day on Monday. So E-Trade that you just saw and Seeking Alpha here is after Monday, whereas the spreadsheet that we'll get into in a minute is as of Friday close. So I'm missing 1 day of the market. And you can see in that 1 day, we were down 8,600. So this number is 1.47 million on the official Friday update. But all the shares and everything I just talked about will be the same here. So I'm not gonna rehash E-Trade. I should just say, this is that sad part. I only have 998,000 in E-Trade. So without my nephew, I just can't quite sniff that 7 figures. And then for the 401k, it's all in VU. This is my wife's 401k that we've had going for years. We put as much as we can away, and it's worth $406,000. And then for the HSA, also through her job, it's VUG, and it's worth $31,800. And then of course the HODL factory, my individual stocks, I make separate videos on those, but it's worth $16,000. And then checking and other just for bill paying is at $8,700. Now let's hop over to M1 Finance, my other online broker, to see if we're still outperforming that pesky market this year with my individual stocks. All right, we're out here checking out the HODL factory on M1 Finance. And this is my favorite investing I do. I know I'm a big believer in the modern 3-fund passive portfolio, and I do think it's a great way to go for 99% of people, probably myself included. But man, it's more fun to pick individual stocks. I'm not gonna lie. And as I said, we're at $16,100 here out in the HODL factory. It's on all, but let's go to year to date. The HODL factory is up 33.3%, and the market VU is up 18.99%. And I should say in this experiment, this is a money weighted and a time weighted return, because it's money weighted by default to show how decisions have panned out, but I have also put in the same amount of money, every contribution along the way. So in that sense, to compare to an index, it's also time weighted. So this will be accurate as we continue this experiment forward. Doesn't matter if I put in huge sums or not. It has the best of both worlds on the return type. The last quarter, we're up 12% to the market's 3%. We've done really well in the last 3 months. 1 year, this one's always kind of weird. It's tighter, just those weird timing things. We're up 54% to the market's 49. And then all, and inception was 4/20/2023. The HODL factory is up 74% to the market's 42. I'll take it. And again, I'm not gonna dive into the individual positions. That's a separate video. But this is just to show you that I'm a genius and I'm beating the market. I'm totally kidding. This thing's new. It could be a lot of coin flips, but so far so good. I'm excited to see where it goes in the future. All right, now we're over to the spreadsheet that I update every Friday at market close. And this is the main portfolio tab here. You can see I've put in the money that each of the investments we've gone over is worth as an individual line item. And again, this was as of close Friday the 4th, right? Yeah, 10/4. Lost about 8K Monday, but this is my last official update, and it was for 1.47 million. I should say the spreadsheet's out there for anyone to use for free. You can check it in the video description below. It'll be my stuff, but you can replace it with yours and make it your own. own. And it's pretty fun to see how the portfolio progresses over time. So I highly recommend you just go out there and mess with it a little bit. So the first thing I look at is the allocations. And this is for the modern 3-fund portfolio. I like to try to keep growth, the S&P 500, my cornerstone, and value, my dividends, this is SCHD only, at about a third each. And then everything else has its role. So you can see I have a big chunk of VU, that's my only S&P 500, big chunk of SCHD, which is my value. And now on the growth, we have almost 20% of VGT, almost 6% of QQQM, and 2.2% of VUG. I consider those growth right here. And then cash flow, not cash, but cash flow is JEPQ. Cash is my money market and high yield savings. Everything's squished into one number here for cash. We're about 6.8%. I've been working that down a little bit. And then crypto is all IBIT, and stocks are the HODL factory. So these are the ones I balance. And these are the ones that are a little more fluid. I'll make decisions on the fly. You know, usually I balance around my target allocation of cash, as a lot of long-term viewers know. This was 10% for a while. I'm getting it down to 5%. But cash flow, crypto, and stocks don't have a set allocation that I stick to with my system compared to the balance of these three, which are the majority of my net worth. And real quickly, we'll cover snapshots here. You can see that 10.4 was an all-time high, and that's the ones that are highlighted. I was up 3,500 or 0.2% compared to the week before. Just scooching back, here's that $73,000 lost in 1 week. And I really do know people that made moves because they're like, well, it's not the bottom yet. The guy on TV said this is just the beginning. And I mean, you know, ouch, because I'm up $91,800 since then. And it's just, I sat on my thumb, did nothing, and that's the best way to handle this stuff. I know it sounds crazy. And then the portfolio value. So October only has one entry, and it's the 1.47, because this was technically in October. The one we're really looking at this month is September, which was 1.433 million. And I believe, yes, sir, that is good for another all-time high on the monthly average. So if there's 4 or 5 updates, it just takes the average portfolio value over the month. And again, I mention it every month, but these are just fun to see your portfolio grow, hopefully, over time. And the last thing the spreadsheet will do for you, if you take the time to fill in your information, it's really easy. I have a little tutorial video out there as well if you want to watch it. But when you put in your date of birth and you put in your assumed total return, don't worry about inflation. I mean, you could put 6 or 7 if you want to account for inflation. I don't like to do that because I have separate modules for that. But I assume a very conservative 8% growth instead of the historical average of 10. And this just shows how old I'll be if things go as planned, and you know, things happen. But this is the amount I'll have at each age, assuming that it gets the 8% growth and that my contributions remain the same over time. So you put in this and it's all linked. Everything updates real time, and these green ones are linked from the stuff you filled out earlier. So it's just fun to see these numbers if you want to get out there and mess around with it yourself. It's time to find out where I was sprinkling that money last month. Portfolio contributions. I've been deploying more cash into the market than I typically do. I moved my cash target to 5%, down from 10%, because of the newfound position I have in JEPQ for my greedy cash flow. I want to keep the cash flowing as we enter this new low rate era. This is especially important for me because I left my job, so I no longer have those default dollars to average into the market at all times. I need to create my own cash flow now. Let's review the September transactions. We only purchased 3 different things throughout the month of September. I filtered September here on this slicer for the pivot table. And we have the HODL factory. I bought in 5 times. The first one for the month was 150. It was the old amount. And then the other 4 were 100. It was a total of $550 going to the HODL factory on a weekly basis. And then JEPQ, we picked up 50 shares for a cost of $25.71. And for SCHD, we picked up 20 shares at a cost of $16.85. Now, some of this was from the JEPQ dividends, but a lot of it was just from my money market and slowly getting my cash position deployed. Again, no new money outside of the HODL factory, which is YouTube money. There's no new money in this. This is just me shuffling things around. But it was a pretty chill month, you know, put some money into my favorite holdings and nothing too crazy. I think there will be more to come in our October update. I'm getting a little more wild recently. Let's move on to the next section. Get your umbrellas out. Dividends received. It was raining dividends in September to the tune of over $5,000. Let me show you what I'm talking about. All right, I'm out on the dividend spreadsheet within the portfolio tracker, and we have all of 23 and 24 selected right now, all the months. Of course, 2024 only has data for the first 3 quarters or 9 months here. But as I alluded to, over $5,000 in September. We smashed last year, which was $3,300, pretty solid in its own right. And I'm pumped to say we officially have more total dividends than the entirety of last year. And that's even including these 3 right here. So we are going to obliterate it by the end of the year. Just looking at September, last year I had a slice of JEPI and JEPQ. This year I just have a lot more JEPQ because we built that position in the last 12 months. So you can see 1,127 from JEPQ. My M1 mix is just slowly building, and that dividend growth of 20% has been incredible so far. Savings, 666. God, another creepy number. Two months in a row. What am I doing over here? But savings is just within E-Trade to make them moving around. It's like 4.25% now. It just moved down a quarter. Not the best savings, but just somewhere to plop cash. HD last year did really well. This year had an all-time high in September, an all-time third quarter high, in September. So very solid performance across the board for SCHD. VIGIX. Oh, yeah, we don't have this one anymore. I call it VUG. This is the HSA got dividends. That one actually came in October this year. So we'll see the difference there. They landed in different months this year. The money market, I have more than I did last year because I always explain this. Last year I had a lot of T-bills on a ladder. So it doesn't quite do justice to 2023 since I recognized the interest in 2022. So it's not quite apples to apples yet, but it will be soon with these. And then QQQM is new, and I got the $129 compared to 0 last year. I did convert some VGT, which will hit in October. I did sell some VGT at the time to buy QQQM, so there's always gives and takes. But there you have it. That's over $5,000 for the month between those holdings. Really happy, and we'll see. We should get this over 30K, dare I say. Now to see how we hit those new all-time highs last month. Portfolio performance. It's time to see how the portfolio really performed in the month of September. Let's get it. We're out here on Portfolio Visualizer, where I like to run my back tests, and I'm using my investing timeline. So what I did was from 2010 through 2012, I was 100% in the S&P 500 through my work 401k only, and I can't go back before 2012. So I give myself a starting amount here to roughly mimic my portfolio, 81,000 starting and 2,000 per month contributions. These might not be perfect, but we'll show how they get to the end result for comparison here in a minute. But this is when I started investing with a little more purpose. Include year to date, yes, of course. And we have monthly contributions, $2,000, rebalance annually, and I mostly rebalance with contributions, but similar concept. Reinvest dividends, yes, and display income, yes. And before we hit go, we're going to show the 3 portfolios. So for my mix, I have a third of SCHD, a third of VU, and half each to make up the last third of VGT and QQQ. Now, I actually was VGT for many, many years and recently out of QQQ, and VGT did better. So this actually makes the backtest look worse than I actually did. But since going forward, this is my modern mix and what I'm working towards. And then we're going against VU, portfolio 2, and then we're going against VT, which is the world stock market. It's like VTI plus international for portfolio number 3. So we're going to see how we compare against the market that everyone tries to beat in general and the world market that a lot of bogleheads swear by. So let's hit analyze here. You can see we're pulling information from January 1st, 2012 through 10/4, that's last Friday, 2024. We're going to start on the performance summary. So the long-term view, and we'll get into the monthly data as well, don't worry. But the long-term view, when you start with 81K and you put in 2,000 a month, you can see my mix gets us to about where I am. And that's why I used those variables. Now, if I would have done the exact same thing, only used VU instead, the market, I'd be about $200,000 shy of where I am. And if I only use VT, I'd be over $500,000 less than I am now. So what I've actually done, not in theory, what I've actually done is paid off. I think it's a fairly well-balanced portfolio. And we'll get into the return stuff later. You can see the standard deviation is slightly higher than VU or VT, but in the ballpark. And then the best year is the best, the worst year is the best. We'll kind of see the year by years here in a minute. And then our ratios for Sharp and Sortino are higher for those juicy risk-adjusted returns. I like to look at the portfolio growth bar. You can see that my mix is blue, the market is green, and VT is gray. I like to show that just to show they go together. They trend together. It's not like you're going to get way different results because we're basically, with my mix, just creating a VU, only a little more selective on the value side and the growth side. But they're always going to do the same thing. Even if the market crashes, same downs. If it goes up, same ups. It's just the degree that they go down and that they go up that changes. All right, we're down to the annual returns chart. You can see same colors, blue is us, green is the market, gray is the world market. And we got out of the gates pretty slow, but then we've outperformed both indices for each of the last 11 years after that point. Except for this year, we passed VT, but we are still lagging that market. So, of course, right when I start making videos, hey guys, check it out, it works. But we'll see what happens in the last couple months. You never know. So you're telling me there's a chance. We'll cover these trailing returns for the annualized returns quickly, and then we'll get to the monthly data because we look at this each month. So I don't want to harp on it too much here. The mix is up 16.3% to the market's incredible 14.81 during the full 12 years and change. And then the world market's up a respectable 10.76. So when you see that we've outperformed the world market, it's not that it's done bad. The markets have just been incredible here in the US in the last 12 and a half years. And the reversion of the mean could be lingering. And in the last 10 years, we're 15.2 to 13.4 of VU and 9.47 in the market. And then a similar story, actually we're losing the last 3 years, you can see, by 0.02%. Oh, I threw it all away. I should have just gone with the market. And then the world's bringing it up the caboose at under 8% over the last 3 years. And now we're here at the monthly returns. And we can see in September here, month 9 of 2024, my mix returned 1.88%. VU, the market, outperformed my mix at 2.18%. And then VT, the world market, actually took the crown that month at 2.2%. And then here it has it by individual holding within the mix. And you can see SCHD underperformed a decent amount at positive 0.91% gains. And then VU, of course, the market, we saw that over there. It's also in my mix, 2.18, so that tied. VGT and QQQ actually carried a little, and they had been struggling, you can see the months prior, but they were up 2.35% and 2.62% respectively. And then that world market, 2.2. So we had our second month in a row of underperformance, unfortunately. And again, our portfolio does have some good dividend growth. All 4 holdings are solid. Well, I should say all 3 holdings outside of VU, which is the green bar. But you can see like over the years, we're amping up our portfolio income, which isn't the point because they're all being reinvested. But, you know, it doesn't hurt to get those qualified dividends and have them increase to something like 19,000 versus 13,000. Oh, I'm sorry, one more bar. 20,000 versus like 15K or so. And then this year we can't really count yet. I guess they've all paid at this point. So this is apples to apples. This year is so far missing a quarter, 18.7 compared to 11.9 on the divvies. And then here's a summarized list of nice information. For the sake of not doing this each and every video, I'll just quickly say our trailing 12-month yield is 1.78, and our PE, you want this low for better value, is 26.7. Whereas the market's trailing 12-month is a much lower 1.28, and the PE is a similar 26.82. So we really do create a mix that is on par with the market from a value perspective. And then the world's PE is actually up a little compared to last month. It's at 21 even, and its trailing 12-month yield is actually an impressive 1.85. My portfolio mix is falling short of the S&P 500 so far year to date, and we're running out of time. I'm hoping for a last-second heroic comeback at this point. Looking ahead, I know that I likely come off like a robot with this investing stuff, but I do think it's okay to have some wiggle room within your system. Most of my money is in the modern 3-fund portfolio. And for me, that's 1/3 of VU, 1/3 of SCHD, and 1/3 of VGT plus QQQM. A little mix there within the growth sector. But I do play around the edges of my portfolio. I have JEPQ for greedy cash flow, IBIT for a potential Bitcoin pop, and a varying amount of cash. For example, as I mentioned earlier, I've been slowly working my cash position down from 10% to 5%. And it's not because I all of a sudden think that cash is trash. I like the opportunity of SCHD and JEPQ in the lower interest rate environment that we're entering into. Being flexible and bending the rules is okay, as long as you're not making knee-jerk reactions to the crazy stuff that the news is talking about. Remember, at that point, you're already too late. Make your adjustments based on what you feel is right as the market progresses, and always be open-minded and adaptive, but just keep the majority of your portfolio in the boring stuff. And check out one of these two videos if you want to continue down that path of building your perfect portfolio. Thanks for watching, and I will see you in the next one. Peace.